Here we have the current stock market analysis for Mara Holdings Incorporated, stock ticker MARA. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So what we have here is a 4-hour price chart. We're going to take a bit of a longer term view here so that we can assess the broader trends for this stock. We have seen some fairly significant support breaks to the downside. So what we're going to be doing in this video is to identify some important price levels, some important support and resistance levels so that traders can develop some profitable trading strategies for this stock in the days and weeks ahead. So as we can see here, this is the 4-hour price chart. Each candle on this price chart represents a 4-hour trading period. Recently, these near-term highs have started to roll over after finding some resistance at $18.83, and we can see some fairly interesting developments there in terms of the price's relationship to its exponential moving averages. So as we can see here, share prices really didn't even manage to overcome the 100 period EMA. So that would be this purple line here. This kind of declining purple line would be the 100 period exponential moving average. And then above that, we have the 200 period exponential moving average. And as we can see here, the share price itself didn't even really manage to touch that upper line here. So we did see an ultimate price failure coming in right at that 100 period EMA. And then from there, share prices did reach new near-term lows coming in at 13.17. This is significant because as we can see here, that movement to the downside violated prior support zones, which came in at 1367. So it's not a huge break to the downside, and we actually didn't see very much follow through from there. It was roughly a 50-cent price break, and then since then we have started to see some movements higher. But the way things currently look here, this is starting to look very heavy because this sequence of events has resulted in this near term, this prior high coming in at 2730, and then this more near term high failing at 1883. So currently, what we do have here is a series of lower highs and higher lows. So that's what gives us a downtrend. And this really doesn't suggest currently that we're going to be able to see share prices move much higher. So as we can see here, this negative bias for this stock would start to change. At the very minimum, we would need to break above the exponential moving average cluster itself. So that would mean a break back above this blue line that was mentioned earlier, the 200 period EMA. Because this does roughly coincide with the prior historical highs, which now can be seen at 1883. So it'd be roughly this area here. So if we were able to see share prices, break above this level, it would be a fairly significant price movement because not only would we then be above these historical resistance levels, but we would also be above these moving average resistance levels as well. If this price movement were to occur, then we could start to look at this most recent trend wave as being the dominant price movement, and then we could start to use Fibonacci analysis as the basis for the expectations for retracements higher. So, if we were to be looking at this area, as we can see here, there is a very important Fibonacci retracement zone that does come in right around this 1883 mark. So what I would be pointing to here would be the 38.2% Fibonacci retracement, which currently rests right around 1850. So it's not exactly coinciding with that 1883 price high, but it's relatively close. And then when you combine that with the fact that this is also roughly where this 200 period exponential moving average is resting, you do have three different signals here forming roughly in the same area. So roughly between 1850 to 1880 would represent a region of very strong resistance. Overall, we would expect to see share prices start to fail at this level if we were to approach here. However, if share prices did manage to break above that level, this would ultimately tell us that something is changing here within this trend, and that we can start to imagine or assume that downside share price pressure will start to abate, and then we'll start to see a bit of a drift higher at that point. There's still some wood to chop, though. However, in order for us to reach that area, because as we can see here, share prices have not even broken above the 23.6% Fibonacci retracement. So I don't want to get ahead of ourselves here, but what I was explaining in that prior portion of the video was what it would take essentially for share prices to sort of ease with this pressure to the downside. This would take pressure off of the downside if we were able to break above 1880. But as things currently stand, there are still several layers of resistance that would need to be overcome before that occurs. So really the first area to watch here would come in right around 1640, because this does mark the 23.6% Fibonacci retracement of that aforementioned price trend move. So that would be this entire move here. So roughly from 2730 to 1317, if you retrace 23.6% of that area, you come up with roughly 1640. And then this is also where the 50 period exponential moving average is resting. That would be this orange line here. So as we can see here, there is a confluence of events here as well, a confluence of technical indicators, which would suggest that this could be a formidable level of resistance as well. So we're currently coming in, fairly close to this area. And if we were to see a price failure here, that would really retarget these 1317 lows. And then a break from there would just simply reestablish this prior downtrend, suggest that prices would continue moving lower. So overall, we have started to see some upside price movements here. But, from the longer term perspective, you're seeing a few different negative signals here. I mean, one other thing that we could point out would be the potential for a head and shoulders pattern to be forming at this point. So we could sort of point to this here. And then here would be your lower right shoulder. So this would be an ominous pattern here, because the head and shoulders pattern with a lower right shoulder tends to be a lot more effective than a head and shoulders pattern with equal shoulders. So essentially what we're looking at here is the left shoulder of the pattern, the head of the pattern, and then this would be the right shoulder of the pattern. So, as things currently stand, we are sort of grinding through the neckline currently. That is really what we're looking at this point. I should have drawn that a little bit lower. Let me just move this down a little bit here. But this break into 1317, this really is looking like a head and shoulders pattern. And you really would need to see a break above this 1883 level in order to sort of invalidate that head and shoulders pattern. So overall, this is not looking like a very positive price chart. I would definitely not be a buyer of this stock. So here's the current stock market analysis for Mara Holdings Incorporated, stock ticker MARA. Our high-value trading strategies membership is currently available for a limited time for only $9.99 per month. These high-conviction investment strategies are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.